I'm very, very focused on crypto again right here. I'm very focused on bonds, very focused on crypto. And it feels that the crypto markets want to start pricing this.
Yeah.
How are you thinking through that? So what we're both trying to say, which is why the macro is so important here, is we're both saying, listen, it's unlikely that M2 is going to remain so negative. We're already seeing China increasing its M2. So even if we don't return to QE and massive rate cuts, let's assume we don't. I actually think we'll get some of that maybe later, but irrelevant. But because the chart is up and to the right, you're holding a ball underwater, a beach ball underwater. And the moment M2 stops contracting, the ball rises. Just because of is that how you, so, I'm very, very focused on crypto again right here. I'm very focused on bonds, very focused on crypto. And it feels that the crypto markets want to start pricing this. Yeah. How are you thinking through that?
Yeah,
Does that make sense?
I agree with that. I think Bitcoin and the rest of crypto just has to survive this winter of deleveraging. It's the winter of our deleveraging, and because that's an idiosyncratic thing where we all know the stories of who blew up and this and that, and clearly that whole kind of balloon is shrinking, which at the end of the day, of course, will be I think a very big opportunity, because then you can get in based on the fundamentals. Which, as you mentioned, the network adoption curve is up and to the right. We don't know the slope, but it's still up and to the right. But it's nice to be able to get in when you don't have to worry about if some person is going to get liquidated and drive another 10,000 points, down. And so it seems to me we're getting towards the end of that cycle. You're seeing headlines of hedge funds and players blowing up. And, usually when you're at the beginning of a downturn, you have a sense that people are blowing up, but you don't know who they are. And when they start making the headlines, I think it's when you're later in the cycle. So I agree that it will be nice to start looking at the fundamentals. I mean, we're all looking at the fundamentals, but to start having price respond to fundamentals without worrying about, who's over their skis and has to puke out. And then it comes down to really, to me, the most important thing is the slope of the demand curve, right? So we know about supply, stock to flow. I think the stock to flow model was very useful in the early days in explaining this parabolic curve. I think it's going to be less and less useful going forward, just because with every halving, more and more coins will have been mined. You'll be closer to the supply limit, and it's just going to have less and less of an impact. So that stairway to heaven, that stair step, stock to flow curve, I think that's not a realistic path going forward. And then we have the demand curves, and as you've done it as well. There's hundreds of S curves historically that we can draw from with various different slopes, and I think this is a good place to kind of remind ourselves and the audience that we're dealing with exponential, data here, right?
I want to make sure that Nico puts that big chart up of all of the historical ones that you've got, which is a magnificent piece of work.
Thank you. But we're not dealing with a linear formula here, right? It's like if you're valuing a stock and you put in the earnings growth in the numerator of the discounted cash flow model and the cost of capital in the denominator. If your cash flows are growing at 6% versus 5%, maybe the PE you're willing to pay for that stock is 20 instead of 19. But that's a linear concept, right? For Bitcoin, one S curve, which is go up and to the right, versus a steeper S curve, which is further up and to the right, can be the difference between Bitcoin at 100,000 or Bitcoin at 1 million. Like the numbers are exponential by definition, and I think that's going to be the challenge and the opportunity for investors to get Bitcoin right in terms of the potential price appreciation, because even just comparing the internet adoption curve versus the mobile phone adoption curve, again, they're the same curve, but they have slightly different slopes, and that can make a big difference. So I'm hoping that we'll get to a point in the Bitcoin super cycle where enough sophisticated investors have these kinds of demand models, and that it builds kind of a band of around them, where if it goes too far above, investors will short Bitcoin or they'll sell it. If it goes too far below, they will buy it, and that maybe the volatility will start to compress as a result of that. So hopefully, as Bitcoin matures and comes of age, we'll see that. But we haven't seen it yet, so it still needs to prove itself on that front.
When I started down this avenue, this is when I suddenly discovered the network effects that ETH has got and how fast that has been. And I'm not, and again, none of this is about philosophy of the space or anything else. I just looked at the network adoption and went, oh my God, we thought Bitcoin was big, but this was big. How are you seeing the difference in the ETH versus Bitcoin network adoption models?
Yeah, no, but you're exactly right. The ETH network is growing much, much faster than the Bitcoin network, and we all know why, right? It's more scalable, it's less decentralized, it's less scarce, of course. So we don't know exactly what the scarcity is. We know what it is right now, but I think investors will always demand a discount from the Ethereum valuation, because we won't know in some future fork what will happen, to the supply, whereas we do know what will happen to the Bitcoin supply. So you're just trading one against the other, but clearly Ethereum is a faster growing network, and per Metcalfe's law, the bigger the network gets, the more exponentially the valuation of that network becomes. And I've used the example of Apple Computer, where you can see, if you look at their annual revenues, the more iPhones and all that stuff that they sell, the valuation goes up, exponentially to that, until it gets to the point, and then when it gets to the point where the network is so powerful that it has such a large moat around it, that even if I invent a far better iPhone tomorrow, I'm never going to be able to penetrate that network because it's too powerful. And I think Ethereum and Bitcoin, have reached those thresholds. That doesn't mean there won't be other coins and other networks out there, but I think they have satisfied the kind of the test to become big enough to be believed and taken seriously, right? I mean, a couple of years ago, a lot of investors said, well, this can get regulated out of existence pretty quickly. I think we've kind of, that ship has sailed, I think.
So we've talked about, okay, the macro setup, it looks like it's the right kind of zone for this, for crypto to do well. We've talked about the network adoption curves. The next thing I want to talk to you about, because I think it's fascinating, is, and again, I'm not being an ETH maximalist, but I'm fascinated about the staking. Firstly, because obviously it reduces supply. So at the margin, it should mean that it outperforms as a network, given if Bitcoin and ETH had the same amount of increased network demand, let's say they grow at 10% a year, ETH will outperform naturally because we've probably got this limited supply. But what I'm really more interested in, and I think you'll be interested in as well, is I think it's going to set a benchmark rate for yield for the Web3 industry per se. So which we can then monitor risk. We've just gone through a risk blow up because it's not easy for people to understand. You and I have grown up in markets where, oh, well, EM is priced 400 over treasuries, and we price junk bonds over treasuries, and we do. So we have this benchmark of which we can understand risk. Feels like this might be the big setup, and that's a big deal for institutions. I know you guys at Fidelity are, you've got ETH now as part of the product suite. It feels that ETH yield is going to be a big thing because you make the one asset allocation decision, which is I want to get exposure to Web3. Yeah. Maybe you do a 60-40, as you say, with Bitcoin and ETH. But ETH now has a yield, which makes it a lot easier, and it's going to create different pricing structures for us to think about. How are you thinking through all of this? I think it's a very big deal, probably very underestimated. People only think of it in the supply terms. I think the yield thing is huge.
Well, yes, I agree. And if we can if we can start valuing Ethereum through a cash flow model, like a DCF model, and you have the growth and you have some sort of anchor to that growth in terms of cash flows through the staking, then that can be a very big deal in bringing in kind of conventional investors and by allowing them to actually value an asset class. Because in the until a number of years ago, Warren Buffett would ridicule gold, saying it doesn't have a cash flow. Why should I buy it? But no one's going to argue that gold is not an asset class, right? So you can have a yield-free asset as long as it does something for you, right? And gold, of course, is money. It's a store of value. It could be a medium of exchange. Not that people use it that way. And I think Bitcoin is aspiring to be money as well. I wouldn't really consider Ethereum to necessarily be money, but it's certainly an asset class. It's a very growthy asset class.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.